Have you ever wondered why SoFi's stock seems to create so much excitement, so much volatility, and yet still manages to keep investors glued to every single move? Well, in today's video, I'm going to walk you through exactly what's happening with SoFi, what I expect in the coming week, and why this stock may surprise both the bulls and the bears very soon. If you've been following SoFi closely, or you're just curious about where this company is heading, you're definitely going to want to stay until the very end of this breakdown. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Now let's get straight into it. When we look at the upcoming week, the overall picture in terms of macroeconomic data is actually pretty quiet. And that's not because nothing is happening. It's mainly because of the ongoing government shutdown. A lot of important reports that normally drive market sentiment have been delayed or paused. But one key piece of data we do have on the calendar is the Michigan Consumer Sentiment Report, which will be released on Friday. The market is currently expecting a reading of around 54, and historically, this number has had the power to shift markets quite a bit. So, while it may not sound like much, keep an eye on that. Aside from consumer sentiment, we also have a lineup of Federal Reserve speakers throughout the week, including Chairman Jerome Powell. These events come right after the FOMC minutes release on Wednesday. Now, normally traders react strongly to Powell's tone, but in this case, I don't expect massive surprises. Still, it's something worth monitoring. In terms of company-specific events, SoFi doesn't have any scheduled news drops, no fireside chats, and no planned announcements this week. That means the stock is going to move largely in response to technical factors and broader market trends rather than big headline catalysts. And this is where things get really interesting. Over the last 5 trading days, SoFi stock has consolidated roughly 9%, give or take. If you've been following Elliott Wave technicals, the projections point toward a potential move toward the $22 range sometime this week. What that suggests is that the stock may find a bottom in the early part of the week before momentum shifts back upward. Personally, I believe we'll see that bottoming pattern in the first couple of sessions and then later in the week. You may notice institutions stepping in, unusual volume, and the beginning of what looks like another round of fear of missing out buying. And this isn't anything new for SoFi. If you've been tracking it for a while, you know the stock often attracts waves of FOMO before earnings. At the same time, this is also when analysts who lean bearish like to crawl out of the woodwork and drop negative ratings. It doesn't make a whole lot of sense, but the pattern is undeniable. Recently, Morgan Stanley slapped an $18 sell rating on SoFi, followed shortly by Compass Point with an even harsher $12 sell target. Both had a noticeable impact on price. And if history repeats itself, we might see other institutions like KBW or Bank of America issuing similar bearish calls in the weeks leading up to earnings. Whether that happens this week or next, it's something traders need to keep on their radar. Now let's talk about the bigger picture. In the last 6 months, SoFi has already gained an impressive 137%. So some consolidation is not only expected, it's healthy. Short interest in the stock has also been creeping up, moving from about 8.7% of the float to just over 9.5%, which translates to more than 112 million shares currently shorted. That's a substantial number, and it raises an interesting question. Are shorts piling in ahead of SoFi's earnings? If so, that could set up a potential squeeze scenario if the earnings turn out as strong as many investors expect. And speaking of earnings, SoFi CEO Anthony Noto has been dropping hints, what I like to call Easter eggs. Just off the top of my head, I can think of 3 or 4 specific references he's made that point to strong upcoming results. While I won't dive into every single one right now, the pattern is clear. SoFi is positioning itself for a strong earnings report, and investors who connect the dots can see the potential upside. Another interesting detail: the cost to borrow SoFi shares is negative right now. That means brokers are actually paying traders to short the stock. This kind of situation often signals behind-the-scenes manipulation or at least unusual market dynamics. With SoFi closing recently around 25 or 24 cents, that puts many option strikes at or below 25s in the money, while higher strikes at $27 or $28 expired worthless. Looking ahead to this week, the options market doesn't show any major walls that would cap the stock's movement, which means if a good catalyst comes through, SoFi has the runway to push significantly higher without much resistance from the options market. So where could the stock realistically go this week? On the bullish side, the consensus target seems to be around $27 to $27.50, while bears are expecting sub-$25 levels. Technical support sits around $24.29, with resistance at $26.81 and then $29.33. That means, if you're looking to buy the dip, these are the levels to watch closely. SoFi also bounced nicely off its 50-day moving average last Friday, which currently sits around $24.93. If the stock closes below that level for 2 straight sessions, further consolidation is very likely. If it holds, however, that could provide a strong foundation for the next leg upward. This brings me to volatility. I do expect the second half of the week to bring higher than usual swings in the stock. If SoFi dips early, that could trigger both bargain hunting and FOMO buying, creating a tug-of-war between bears pushing for consolidation and bulls aiming for a breakout. Sellers are clustered in the $26 to $27 range, but once that ceiling breaks, the stock has the potential to push higher very quickly. On the downside, if 24.51 cents fails, SoFi could slide to around 23.25s before finding its footing again. So what does all this mean? To put it simply, SoFi is gearing up for a very important couple of weeks. Earnings are right around the corner, shorts are loading up, and retail traders are watching every move closely. While we could see some early weakness this week, I strongly believe buyers will step in, pushing the stock back toward the 27 to 28 range. And if earnings deliver as expected, that could be the spark that sends SoFi to new highs. Now I want to hear from you. Are you planning to buy the dip if SoFi pulls back? Are you holding shares, writing covered calls, or betting with options? What's your outlook for SoFi as we head into earnings season? Drop your thoughts in the comments below because I always enjoy hearing your perspective. So to wrap this up, here's my short-term outlook. SoFi may dip early in the week, consolidate, and then bounce back into the upper 20s by the end of the week, setting the stage for a potential breakout when earnings arrive. Longer term, I remain bullish as long as Anthony Noto continues to deliver and the fundamentals keep improving. But for now, all eyes are on the technicals, the short interest, and the upcoming consumer sentiment data. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.